If buying your first home feels like one big swirl of credit scores, down payments, and closing costs, frankly, you're not alone. The truth is, once you break it into steps, it is quite manageable. In the next few minutes, I'm going to give you a simple plan you can follow over the next 6 to 12 months. Why waiting isn't always the safest choice. How to think of your first place as a stepping stone rather than your forever home. And the number one mindset shift that helps first-time buyers move forward with confidence. Let's start with a quick gut check. What would owning your place change for you? Privacy? Stability? A yard for the dog? Keep that in mind as we go, because this isn't about a mortgage. It's about the life you want on the other side of the keys. Step 1. Having a clean, clear money picture. Pull your last 2 months of bank statements. List every monthly bill and total up what you actually spend, not what you hope to spend. Most first-time buyers discover a few $100s a month they can redirect. Next, build a small home fund. Aim for 1 month of your future housing payment in savings. This is separate from your down payment and acts like a confidence cushion. Even if you're not 100% sure on timing, start transferring a set amount every payday. Small habit, big impact. Step 2, credit clarity. You don't need perfect credit to buy. What you need is accurate information and a plan. If you haven't pulled your credit in the last 60 days, let me do a soft review with you so we know exactly where you stand. Sometimes a quick dispute, a tiny balance reduction, or adding a small on-time trade line moves your score into a better pricing tier. And if you're self-employed or have unique income, we'll verify that up front so there are no surprises. Step 3, know your numbers. Talk to a lender before you fall in love with a house. Why? Because the payment drives the price, not the other way around. We'll reverse engineer this together based on your comfort range, taxes in your area, and current programs. We'll identify the price band that keeps you sleeping at night. If you want to see what 0% down, 3%, or 5% down looks like side by side, I'll show you. And if you'd like to use a seller credit to reduce your cash to close or buy down the interest rate, we'll map that out too, so you can choose what helps most. Step 4, build your home buying team. A responsive agent who actually listens, a lender who communicates, and if needed, a credit coach or CPA. I'll introduce you to great local agents, and we'll keep a simple group text so decisions are fast and you're never wondering what's next in the process. If you're 6 to 12 months out, this is the perfect time to interview your team before you're under any pressure. Now let's talk about waiting. A lot of people say, we're going to wait until it feels safer. I get it, but here's what most folks don't consider. While you wait, 3 things are also moving: home prices, rents, and your life. If prices or rent rise while you wait, you're paying more for the same house or paying someone else's mortgage longer. If rates drop later, we can always refinance. If prices climb, we can't go back in time. Waiting can be a strategy, but it should be an intentional plan. We're waiting to clear student loan in May, not a vague pause that costs you options. The safest choice is the one that keeps doors open, not closed. Next, the stepping stone mindset. Your first home is not your forever home. It's your first foothold. Think of it like this: buy a solid, well-located place that fits your life for the next 3 to 5 years. Make payments, build equity, let normal appreciation do its thing, and you've created the down payment for the next step. I see it all the time. Buyers who thought they settled for their first place end up grateful because it launched them to the neighborhood they really, really wanted. You don't need the perfect house to start. You need the right next house. So what's the number one mindset shift? Move from can I afford a house to what structure lets me own comfortably. That small shift puts you in control. Maybe that structure is a slightly smaller home in a better location. Maybe it's 3% down, conventional down, 3% down, conventional loan with a seller credit covering some closing costs. Well, maybe it's a 7-year ARM because you'll know you'll upgrade before year 8. When you choose the structure, the stress drops and the plan appears. Get it? Here's how to use the next 6 to 12 months without overwhelm. Months 1 to 2, credit and cash. We review your credit, open the home fund, and set up a simple savings automation. If you have debt with high interest, we'll choose one small balance to kill first for a quick win. Months 3 to 4, pre-approval and payment options. We're going to lock in your budget, look at loan programs, and practice a total payment thinking. Mortgage, taxes, insurance, HOA if any, and a small maintenance line. You starting to get it now? Months 5 to 6, explore neighborhoods. Spend a few Saturdays in your top 3 areas. Drive them at rush hour and on weekends. Walk a grocery store. The more real it feels, the easier decisions become. Months 7 to 12, shop with intention. You'll watch new listings once a day, not 40 times. When the right home pops, you're ready. Pre-approval in hand, closing cost strategy chosen, and the team aligned. That's how you write strong offers without overpaying or panicking. A quick word on down payment myths. You do not need 20% down. Many responsible buyers start with 0 to 5% down and use their savings to keep cash flow healthy. If the gift from family or 401k loan is part of your plan, we'll structure it properly so underwriting is smooth. And if you're thinking, Mike, I'm on maternity leave or income just changed, tell me. There are timing strategies like using a recent 30-day pay history or averaging overtime and bonus that we can plan around. If all of this sounds refreshingly simple, that's by design. My job isn't to push you, it's to give you a clear path so you can decide with confidence. If you want to connect to explore your specific needs, just click on the Calendly link in my bio to book an appointment. Don't forget to subscribe. To wrap up, get a clean money picture, get credit clarity, know your payment-driven price, build your team early, treat the first step as a stepping stone, and choose the structure that lets you own comfortably. Do these things, and buying your first home stops feeling overwhelming and starts feeling doable.